Well, as we know by now, the Supreme Court recently affirmed the constitutionality of the Affordable Care Act. But few of us are really aware of what it will mean for us when the act is implemented in 2014. We've done several stories about this on our program and in the Courier. This morning, our economic expert, U.S. Bank investment analyst Jim Russell, takes a look at it from the perspective of the banking industry in this week's Economic 360. Jim, good to have you with us.
Good morning.
What group is most likely to be affected the most by this?
Number one, good morning, Brian. This is a really big deal to all Americans. Everybody will be affected one way or another, regardless of which group you're in. Retiree, infant, professional, you name it, sole proprietor, etc. So everybody will be impacted. There are probably two groups that actually benefit the most, at least from where we sit. Number one, older Americans will be a beneficiary of the act in two different ways. Number one, it looks like that insurers will have limited ability to actually increase prices according to age. Secondly, there's a situation where retirees have had to pay a significant amount of out-of-pocket cost out of their wallets and purses for prescription medicine called the donut hole. That has been eliminated in this legislation. So those are two benefits for retirees. Now, there's also one other group that probably benefits the most as well, and that would be folks that are self-employed. The establishment of insurance exchanges will make individual coverage probably easier and cheaper for those individuals.
So are health care costs likely to fall when this is implemented?
We would like to think so, but unfortunately I think that's going to be wishful thinking. I think the rate of increase will actually slow, but we will get absolute increases. There's probably one group of people, Brian, that actually will see fairly dramatic increases in terms of their pricing, and that will be the younger, healthier people amongst us. And that those folks usually have higher deductible policies, very low premiums, and it's likely that those costs will rise over time.
I'm really glad you can still consider yourself one of the younger guys. I can't. All right, as the Business Courier reported late last week, an activist investor has bought a bunch of Procter & Gamble stock. What do you know about that?
There's a couple of things going on there. This is a breaking story and would refer our viewers to the Business Courier's website for the very latest. But what we do know is a very credible activist investor named Bill Ackman has bought, it looks like in the neighborhood of $2 billion of Procter & Gamble stock. Procter & Gamble stock has been a little bit flattish over the last 5 years, appreciating only about 1% or so. I think there are elements of the investment community that are getting a little bit impatient. I think Mr. Ackerman is probably likely to work with management for maybe establishing some steps to move the stock forward.
All right. Thanks, Jim Russell. Thanks to you and U.S. Bank. We
Thank you.
Appreciate you.